Hi, my name is Elizabeth Dominguez, and I will begin to speak to you about the strengths and weaknesses that Regions Bank has. I will begin with the strengths. One of the strengths that it has is the ability to increase scale, providing competitive advantage. Regions has been consistently growing in its size and scale of operations in recent years, which has been a result of mix of sustained organic growth and aggressive inorganic growth in activities. At December 2009, Regions had a total consolidated asset of approximately $142.3 billion, total consolidated deposits of approximately $98.7 billion, and a total of consolidated stockholders' equity of approximately $17.9 billion. The company serves customers in 16 states across the South, Midwest, and Texas, and through its subsidiary, its investments in securities, brokerage, trust, and asset management division, Morgan Keegan and Company, provides service for over 300 offices. Leveraging its scale and operations, Regions has been able to improve its market share and in turn boost its revenue and profits. Another strength that Regions Bank has accessed is the problem assets disposals and capital infusion strengthened balance sheet. The company disposed nearly $2.7 billion of its problem assets in the last 15 months ending in the fiscal year 2009. As a result, the company's risk weight asset to total ratio has come down 73% at the end of 2009, compared to its peer median of 85%. Loans migrations to non-performing status was lower at $964 million in quarter 4 of 2009 and was sharply lower in the quarter 3 and quarter 2 of the same year. At this downward trend, it is expected to continue in 2009, which should result in lower provisions. Thus, the company's assets-sensitive balance sheet is now well positioned should rates start to climb once again. Capital ratios throughout 2009 remained strong, finishing the year with a Tier 1 ratio of 11.5% and a Tier 1 common ratio at 7.2%. Regions' capital ratios are compared to its peers. The capital reinforces its ability to continue to be a safe harbor for customers and their deposits. The third and final strength that Regions Bank holds is the deposit-based growth at attractive levels, well positioned in the company. Throughout the year 2009, the company was successful in raising its deposits base at relatively lower costs. The company opened a record 1 million accounts plus new retail and business checking accounts in 2009. Average customer deposits grew $8.4 billion over year. The company's non-interest-bearing deposits increased a total of $23.2 billion at the end of 2009, compared to only a merely $18.5 billion at the end of 2008. This level has remained better than the industry's norms and the company's historical highs. Moreover, compared to 2008, deposit costs declined 66 basis points in 2009. Consequently, the company's deposit-based growth positions its benefits from likely increase to credit demand. As there is some strength, there is also weaknesses. Some of the weaknesses that Regions Bank holds is that there's a declining loan book size affecting the interest income. The company's loan book size contracted in 2009. The loan decreased by 6.9% in 2009, driven mainly by lower commercial and industrial loans, as well as a decline in construction loans, reflecting developers' reluctance to begin new projects or purchase existing projects under current economic conditions. Also, a large portion of the company's indirect consumers' lending portfolio is a runoff mode, which is the catalyst to lower outstanding balances for the assets. Declining in a loan book size results in lower interest income of $5.3 billion in 2009, compared to approximately $6.6 billion in 2008. Continued decline in a loan book size could weaken interest income of a company. Another weakness that Regions Bank holds is the dividend payments related to CPP may affect net income. The company is one of the borrowers under the U.S. Treasury Department Capital Purchase Program, which is the CPP. Capital borrowed program under CPP strengthens the company's capital ratio. The company paid the U.S. government more than $219 million in dividends since '09. Had the company redeemed preference shares under the CPP, then it could have saved dividend payments, which would have been earnings in the positive. Moreover, some of the companies have reduced and redeemed CPP while Regions is yet to do so. Non-redemption of preference shares under the CPP is also seen as a sign of weakness. Another weakness that Regions Bank has, and the last one it should have, is the over-reliance on few states in the United States. Regions' financial operations are concentrated in a few states in the U.S. The company operates in just 16 states out of the 50 that are around. This increased the risk of negative financial impact due to the events that affect the local state economies. The company's competitors are much bigger and with presence across most of the states in the U.S. This weakens the company's competitive position and vice versa to its peers. And that is all for the strengths and weaknesses of Regions Bank. Thank you and have a nice day.